Hello, judges. My name is Jesse King,
My name is Luc Montalba.
and we're coming from Crossroads School in California, and we're here to pitch Amphenol Corporations. They operate with a ticker of APH in the New York Stock Exchange. They're in the sector of technology. We're recommending a buy and hold with a target price of $207.32, 34.3% upside from current price of $154.39.
Amphenol has a market cap of $189 billion and an enterprise value of $193 billion. Their return on equity was 24.75% in 2024, which sits well above the industry average of 6.2%. Amphenol is a company with a strong business model selling sensors, digital connectors, and cable systems that are key for letting electronic devices communicate, transfer power, and exchange data. As automation, data usage, connectivity, and electrification processes grow, so does the demand for Amphenol's products. Amphenol has proven consistent and strong revenue growth, high free cash flow numbers, and very high operating margins over 27%. While Amphenol may have net debt, this should be viewed as a positive. The company takes advantage of low-cost debt to expand growth and production, buy other companies, and fund other growth tactics that generate higher revenue and cash.
Company overview. Amphenol is an advanced electronic component company based out of Wallingford, Connecticut, that was founded in 1932. Amphenol has played a massive role in the mass digitization of the world since its inception. This is due to their manufacturing of sensors, circuits, connectors, and cables that are key to building computers, automobiles, planes, and most other digital products. Amphenol owns 873 subsidiaries based in over 50 different countries. These hundreds of companies allow Amphenol to operate with very little risk because each company can share data, client network, and purchasing power, funded and managed by Amphenol. Amphenol is not just one company, it's a network of hundreds of specialized businesses governed by one global body. Their management team has been very experienced with over 73 years combined.
Product overview. Amphenol's main products are sensors, connectors, antennas, and printed circuits. Connectors are their core product that join cables, boards, and other devices to enable data and power flow between each other.
Industry overview.
Yeah.
The electrical components industry assembles the parts that power and connect modern technology as we know it. They're used in almost every single digital device. As the world is becoming increasingly digital, the demand for these products is increasing, causing lots of growth to be expected in the coming years, with the industry's value expected to be over $1 trillion in 2033.
Investment thesis one. Amphenol has used low interest loans to acquire three large corporations in the past 12 months. The largest deal in this period was the purchase of CommScope Connectivity and Cable Solutions, which is a leader in the fiber optic space. This single purchase brought $4.1 billion in expected revenue for 2026 and adds around 20,000 workers. This acquisition is an example of Amphenol's growing interest in the expansion into the AI market because of CCS's products being incredibly important for AI data centers. As a result of many deals and acquisitions, Amphenol's projected EPS for 2026 is $4.50. Its revenue is projected at around $31 million, which would represent around a 22% growth year over year. We recommend to buy and hold Amphenol due to its proven reliability, extreme projected growth, and it being an incredibly promising industry that will grow at a very high rate due to AI considerations. Investment thesis 2. Amphenol's involvement in artificial intelligence is huge. AI data centers rely on Amphenol's advanced connectors, cables, and other products for high-speed transferring of data, meaning demand rises as AI infrastructure expands, which is certain to happen at a high rate in coming years. Amphenol benefits from all AI infrastructure growing. It does not matter which AI chip dominates in future years, because electronic components work with any semiconductor. Amphenol's stock price has mainly been driven by surges in the artificial intelligence industry since it's a large provider for AI data centers.
Financial analysis. Revenue growth. During the fiscal year 2024 and 2025, the revenue had a 49% increase. In 2024, Amphenol's revenue was around $15 billion, and in 2025, their revenue was around $22.7 billion. The projected revenue for fiscal year 2026 is $31 billion, a 36.6% increase. Amphenol uses strategic debt to acquire new companies in the electronic component industry. which therefore drives revenue and earnings growth. Their current cash position is $4 billion, while their current debt position is $4.18 billion. Amphenol currently has a debt-to-equity ratio of 0.64, which gives them efficient leverage. They are not too risky. Revenue by region. Amphenol has 20% revenue growth in Europe, whereas in Asia and North America, it's 38% and 39%. The stock price through the past 5 years, as you can see, Amphenol is at an all-time high in 2026. We believe that Amphenol is just going to keep on going because of all their subsidiary companies there continue buying. Comps. Today, I made a comparable analysis based on competitors in their field, such as Littelfuse Inc., Monolithic Power Systems, TE Connectivity, Skyworks Solutions, Analog Devices, and Broadcom. All these companies trade higher than what Amphenol is currently trading at, suggesting that there's lots of room for growth, along with their PE ratio mean at 49.3x, whereas Amphenol's is only 37.5x, meaning that Amphenol is currently undervalued in its field. The comparable analysis yields an implied share price of $211.31 per share, an upside of 36.9% to current levels.
Discounted cash flow model. The DCF analysis shows that Amphenol is currently undervalued with the exit multiple method yielding an implied share price of $239.34, and the terminal growth method estimating an implied share price of $171.89. These high price targets are driven by the company's great free cash flow numbers that are estimated at around $12 billion in 2034. The free cash flow is supported by strong EBITDA margins that hover around 30% between 2024 and 2034 expected.
The valuation. We made a WACC that averaged around 9.8% based on the average tax cost of debt at 0.6% and the cap M at 10.6%.
Risks and catalysts. Amphenol has a high P/E ratio because investors pay a premium for the stock. This is because investors have high expectations for its stock performance. This is not a concern because the P/E ratio is expected to decline in coming years due to increased EPS forecasted. Another possible risk is net debt from acquisitions. However, Amphenol has $4.18 billion in net debt, which may look like a bad thing at first. However, it's the opposite. Amphenol has accumulated net debt to buy 873 electrical component companies. This drives their earnings and will continue to do so in the future. The last possible risk is Amphenol's stock price has surged in the past year. Amphenol's stock price has risen sharply, which may draw concern. However, this is not a concern, I don't think. This is a negligible risk because Amphenol has proven very high earnings and is projected to continue to do so in coming years, which will support their high stock price.
ESG, management and governance. Social. So in 2024, they measured their global workforce. Along with their revenue, most of their global workforce resides in Asia, along with North America, whereas some resides in Europe and 2% the rest of the world. Their governance. Their board of directors is diverse and experienced. For the environmental standpoint, Amphenol prides itself on being environmentally friendly, with a staggering 52% of recycling. Recommendation. Today for our valuation, we did a 30-35-35, where comparable analysis was weighed at 30%, and the terminal growth method and exit multiple method were both weighed at 35%. This gave us a weighted average of $207.32 per share. Thank you for listening.
Thank you.